I am Marira Joseph, the founder of Bluvos Academy. I've been talking to you on how you can use fundamentals to trade forex and still profit from it. And I'm of the opinion that if you know nothing about forex, it's either you should visit Baby Pips, or let me show you a YouTube video where you can learn the basics. They'll teach you about the lot size, what lot size means, what position sizing means. Let me go there. Should I show you Adams? I don't think. Forex lesson 1. So he has 22 videos on forex trading. You will learn things about lot size, position sizing, risk management, and what have you. What I'm showing you here is how you can use fundamentals to trade the forex and grow the free account you were given to a $1,000 account. So let's head over to what we're supposed to do today. The next fundamental news I use to trade the forex market is CPI, Consumers Price Index. And Consumers Price Index is a news that is released for the United States dollars. Oh, my village people should please leave my phone. Consumer Price Index is a news that is released for the United States dollars and the British pound, also Japanese yen. It's also released for also Swiss francs. So it's a news that has a ripple effect on all major currencies. So this is we are in 9th of April 2024, and on Wednesday 12:30 p.m. look at 12:30 p.m. the United States dollar will have a major impact news by 12:30 p.m. That's why you're seeing this red envelope. And I've taught you about the color code. Now this red envelope is indicating that by 12:30 the United States dollar will have a major news. The United States will have a major news, and that major news, economic news, will affect their dollar. And that news is about CPI. What does CPI mean? CPI stands for Consumer Price Index. And as I said earlier, that economists in the United States are saying that for Wednesday 10th of April 2024 the Consumers Price Index will be 0.3%. Now if it is greater, the actual is greater than the forecast, let's read what will happen. We'll click on this open envelope here. Please open. Okay, now Consumer Price Index measures change in the price of goods and services purchased by consumers, while GDP measures change in the value of goods and services. This one is the price of goods and services purchased by consumers, excluding food and energy. Now they say usual effect by the left here. Say if the actual is greater than forecast, is good for currency. If the actual is greater than forecast, it is good for currency. That means if the actual is greater than forecast, it means the number will be green. If the actual is less than forecast, it means the number will be red. And when the actual is greater than forecast, it's good for the currency. It means you should buy the United States dollars. Now what this means, the why trader care consumer price index. Look at it here. Consumer price index accounts for a majority of overall inflation. This news is so powerful that it also affects the stocks market. So that's why I use it for trading. This news is very powerful. It affects the stock market, affects crypto also. So consumer price index accounts for majority of overall inflation. Inflation is important to currency valuation because rising price lead the central bank to raise interest rates out of respect for their inflation containment mandate. Let me explain what this means. What this means is the central bank of the United States have mandated that if interest rate is on the rise, banks should pay higher. Sorry, I'm mixing up something. If inflation is on the rise, the central bank of the United States have mandated that banks should pay higher interest so that they can curb the inflation. I'll take that again. If inflation is on the rise, the central bank of the United States have mandated that banks in the United States should pay higher interest so that they can curb inflation. So if banks are paying higher interest, the reason why people will be buying the United States dollar, if the actual, you know what they call actual here, actual of the United States for 12:30, 10th of Wednesday, 10th Wednesday, April 2024, if the actual is greater than forecast, banks will be paying higher interest rates so that they can curb inflation. And because they'll be paying higher interest rates, the big boys will be moving their money from the stocks market, hear me very well, to the forex market, so that they can catch in on this interest rate that will be paid by banks. So there will be large movement of funds to the forex market that day if the actual is greater than the forecast. Now, if the actual is less than the forecast, the big boys will be moving their money from the forex market to the stocks market, from the bonds market to the stocks market. So interest rate is directly proportional to the forex market, but inversely proportional to the stocks market. That's big English. In one of my course, how to predict a stock market crash, this is one of the analysis I use. So let me show you what I would do if today is Wednesday, 10th of April, Wednesday, which is Wednesday 2024. Let me show you what I would do with this news if this is 12:30 p.m. already. I'll open my trading application.